your stories, your freedom. The Peter Schiff Show.
Welcome, everybody. This is Peter Schiff here at SchiffRadio.com. Again, I am still broadcasting live from Toronto, Canada, at the headquarters of Euro Pacific Canada. Later on this evening, I'll be making my way to Montreal. I know I am speaking down in Montreal. People had inquired about whether or not I was making any public appearances. I am making one in Montreal, but unfortunately, if you don't have a ticket, they are already sold out. It's actually not that big a venue, so there wasn't that much room. It's mostly, I think, clients of Europac Canada. So if you are Canadian, you're not working with Europac Canada, you might consider opening up an account. Anyway, looking at the markets very quickly this morning, it's a strong day in the gold market. Gold up about $16. Looking at the ETF GLD, silver strong. The dollar is very weak this morning across the board against all currencies, not only the euro, but the commodity currencies. The Aussie dollar very strong. Now back above parity with the U.S. dollar. It had been below for a while. The Canadian dollar still below parity, but heading back that way very quickly. Now back up to about 98 cents. The Aussie dollar is about 101.5. The euro, though, taking out another key handle above 137, trading at 137.30. This is the highest the euro has been since September 16th. In fact, I think if the euro can move above 140, I think you're going to see a huge rally. I think there's a lot of people who are short the euro. A lot of people were writing the obituary of the euro. The euro may eventually die, but it's not going to be for a while. And so I think there could be a big rally coming, which probably means there's a big rally coming in stocks as well. Commodities, everything will go up, but the dollar will go down. Eventually, it will go down to the point where it'll then no longer be positive for stocks. People might actually start to worry about a weak dollar. Maybe it'll be too much of a good thing, although, of course, it's not a good thing at all. But the markets perceive it to be a good thing. But at some point, the perception will change as the dollar really starts to break down, particularly if the dollar index is trading, I think, below 70. I think that's really the key level. So the dollar would have to drop about 10%, because the dollar index right now is 77. So it needs a full 10% decline to be back at 70 even. But I do think that's coming. The dollar got as high. If you look at the peak of the rally of the dollar index on this move, we got as high as 79, almost 79.70. Or no, actually, yeah, 79.80. 79.84 was the peak a week ago. And we've already dropped from close to 80 all the way back down to 77. And it looks like we're headed lower still. I think the key level now to look at in the short run is going to be the 76 handle. I think if we break below that, then I think it's a much bigger drop. If we don't, if we have support, we might have to retest the highs, maybe around 79, 79.50. I don't know if we're going to make a new high on the dollar index. I kind of doubt it. I think maybe the high is in for this short-term counter trend rally in the U.S. dollar. Stock market, too, the Dow is up almost 100 points today. We're now all the way back up to 11,500. We're getting near the overhead resistance in the market. If we can get above 11,700, then probably the low is in, and we're not going to hit that 10,000 level that I thought would ultimately be the bottom of this correction. Although if we roll over from here, it's certainly not off the table. But the markets are starting to trade a lot better, and it's being confirmed by weakness in the currency markets and strength in commodity markets. Look at the price of oil back up to $86 a barrel. Hey, moving to politics, I was able to watch most of the debates last night on Bloomberg. I had to watch it on my laptop. I wasn't able to get Bloomberg television in my hotel in Toronto, but I was able to watch the whole thing on Bloomberg's website. And yeah, I mean, I guess not overall bad. Performance. I think Ron Paul did have some good lines in there, and he did have some good responses. I kind of wish, though, that he had more of a program like the 999 plan by Herman Cain, because I think it's kind of catchy. I saw Herman Cain on CNBC this morning, and while I was on CNBC, he said that he's the only candidate that wants to scrap the tax code, that has a plan that scraps the current tax code. Now, I know Ron Paul would like to get rid of the income tax. He's said it on many occasions, but somehow Herman Cain is able to get away with saying he's the only candidate that is in favor of scrapping the tax code, maybe because Ron Paul hasn't actually come out with a concrete plan that lays out getting rid of the income tax. So maybe that would be something that would be helpful in attracting more support, because now that Ron Paul Herman Cain has taken a lot of support away from some of the top-tier candidates, now we need to migrate that support over to Ron. You know, I got an email from somebody saying, hey, given that Herman Cain said favorable things about Alan Greenspan, and I'm going to play what he said on last night's debate. Do I want to reconsider my endorsement of Herman Cain given what he said about Alan Greenspan? First of all, I've never actually endorsed him. I said that he's my third choice, and one of the reasons he is my third choice and not my first choice has to do with his the way he regards Alan Greenspan. Clearly, Alan Greenspan was the worst Fed chairman, although Ben Bernanke is giving him a run for his money. But my point is that I prefer Herman Cain to Romney and to a number of other people that might get the nomination. So, you're never, a lot of times that you have to look at these candidates, and you're never going to get the perfect candidate, although Ron Paul is pretty close. But it's always a question of which candidate do I have the least disagreement with. And certainly I think that we would be better with Herman Cain than many of the others who are running for president. But, of course, he is far from perfect. A few people are. But anyway, I've got some sound from Herman Cain last night when he was asked which Fed chairman did he believe did the best job. And his answer was Alan Greenspan. Have a listen. It's cut number 3.
One of the most important appointments that you're going to have to make your first year, should you be president, would be Fed chairman. So which Federal Reserve chairman over the last 40 years do you think has been most successful and might serve as a model for that appointment?
Alan Greenspan.
Why?
Because that's when I served on the board of the Federal Reserve in the early 1990s. And the way Alan Greenspan oversaw the Fed and the way he coordinated with all of the Federal Reserve banks, I think that it worked fine back in the early 1990s.
Now, one thing, I guess, to qualify some of his remarks is he is limiting his praise of Alan Greenspan to the early 1990s. And clearly, the biggest mistakes he made were in the latter part of the 1990s, or more particularly in the 2000s, is where he really was pretty bad. But, the essence of the Greenspan philosophy of bailing out with cheap money, of coming to the rescue of the markets, started with the 1987 stock market crash. And so that Greenspan philosophy and the Greenspan put had its birth at that period of time where Herman Cain is praising him. And I much prefer Ron Paul's answer to that question, and we're going to play that when we come back. So stick around. This is Peter Schiff on SchiffRadio.com.
Hey there, brother, watch your little mama. She's a little handful, yes, she is.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
And this is Peter Schiff here at SchiffRadio.com. I'm taking your calls from Toronto, 855-4-SCHIFF, 855-4-SCHIFF. Before I go to the phones, I want to play Ron Paul's rebuttal to Herman Cain's statement praising Alan Greenspan. Here is how Ron Paul handled that same question, cut number 12.
Spoken like a true insider. Alan Greenspan was a disaster. Everybody in Washington, liberals and conservatives, said he kept interest rates too low too long. Of course, the solution was lower them even more, and they think that's going to solve our problem. But if I had to name one person that did a little bit of good, that was Paul Volcker. He at least knew how to end or help, end the inflation.
Yeah, clearly Paul Volcker, a much better choice than Alan Greenspan. But again, Herman Cain is getting a lot of extra support. He's rising in the polls, which I suppose is better than Mitt Romney rising in the polls, but not as good as Ron Paul. But again, I think that it'd be good if he got out there with some kind of a definitive plan, so that at least Herman Cain couldn't own the issue of I want to get rid of the IRS. That should be Ron Paul's issue, and if he maybe grabbed it a little bit, Herman Cain wants a 10%, a 9% income tax. Maybe a 0% income tax would be a better way to combat that. I mean, we could still have a sales tax, but the income tax, even leaving it at 9% means that one day they might raise it. It started when the income tax was first passed. The top rate, I think, was 4 or 5%, and there was a movement in Congress. I wish they would have done this to limit in the amendment, in the 16th Amendment, to actually limit the rate of tax to 10%. And the reason they voted it down is because people thought that, well, if we have a limit of 10%, somebody might actually want to raise it that high. So I don't know why they didn't have a lower limit. That would have been a solution to that argument. But unfortunately, we didn't have the limit, and now we've got the very, very high rates of taxes that we have today. And here President Obama wants to raise them even higher. The taxes aren't high enough on the millionaires and billionaires. And, of course, they're already much too high. The rhetoric is that the millionaires are not paying their fair share. We know the millionaires are paying more than their fair share. They're paying higher percentages of their income than middle class or lower class, and they are obviously paying a much larger total amount of tax for their share of finance in the U.S. government. But anyway, I'm going to talk a little bit more about that. Play some of the some from Obama's most recent speech, but I want to grab some of the calls before the guest is coming up at the top of the next segment. So I'm going to go to Dan, who's calling from Toronto. Dan, welcome to the show.
Oh, hi, Peter. Thanks for having me on. Peter, I wanted to talk about banking, and there's a change I'd like to see in banking, in retail banking, and I'd like to get rid of withdrawals on demand for several reasons, and I just want to hear your feedback on that. I actually like to argue the point because I really believe in it strongly. Now, withdrawal on demands are a really bad thing for the economy. They create a moral hazard. They set banks up for runs, and they're a lie. Because, in reality, if once 10% of the people want their money out, of course, there's nothing.
Yeah, well, that's why, and, first of all, for those of you listening in Toronto, I see we have someone also on hold in Montreal. I will be on BNN, or rather in Canada. I will be on BNN today at 4 o'clock. Got about a 15-minute hit on BNN. So if you're in Canada and you want to see that show, don't forget to tune in. But, yeah, there is a difference between time deposits and demand deposits. And, that difference has been blurred in modern banking. But once upon a time, a demand deposit paid no interest. These were checking accounts. They paid no interest because the money was available on demand. Therefore, the bank had to keep it there because if you wanted it, they had to give it to you. But if you locked your money up in a time deposit, whether it's a savings account or even a more formal certificate of deposit, where they're paying you interest, the bank doesn't have to give it to you when you want it. I mean, they will if they can. But obviously, if the bank is earning interest or paying you interest on your deposit, it can only do that if it loans the money out. So if a bank loans money out, it's obviously not there to be paid on demand. Now, for most people, yes. I mean, if only a few people come in and they want to access their savings accounts that are interest-bearing right away, the bank will accommodate them because they generally keep reserves around. But they're not required to. It's okay if the bank says, we don't have the money today, come back next week. It's not in a demand deposit. But if it is a demand deposit, then they have to give it to you, which means they can't loan it out, which is why, the demand deposits would not pay interest. But now, of course, you have interest-bearing checking accounts, or at least you used to while there was interest. Right now, you don't get interest on any of your deposits, but, of course, the banks loan it all out. And the reason that the banks loan out so much money is because no bank cares about a run because they're all insured by the government. If we didn't have deposit insurance, then the banks would be concerned about potential runs, and as a result, they would keep adequate reserves on hand at all times to guard against it.
Peter, thank you for your feedback on that.
Yeah, thanks for your call. Next up is Brenda calling from Los Angeles. Brenda, welcome to the show.
Yes, good morning, Peter. My question on China and copper. For China, I wonder if you have any feel for if the economy and the market is bottoming, and your thoughts on copper along with that.
Well, I'm bullish on copper, and I think that we've had a recent correction in all the industrial metals. All the commodities have come down, and I think we are reversing that now. Certainly today is a very, very strong day for metals, and if the low is in the markets, and maybe it is in. I mean, the markets have been trading very strong. I think we're at key levels, but if we can continue this rally for just even a few more days, I think it would be a pretty good indication that the bottom is in across the board. Right, at least for now, in stocks, commodities, foreign currencies. Looking at, if you look at interest rates right now, I'm looking at the yield on the 10-year. The 10-year is now all the way back up above 2.2. It's moved up very sharply. In fact, if you go back to when the Fed announced Operation Twist, the yield on the 10-year is now higher than it was when they announced Operation Twist. It was lower than this, and it went all the way down to 1.7. But now we have reversed all of the gains in the 10-year, and now 10-year yields are higher than they were, just a little bit higher, but higher than they were when the Fed announced Operation Twist. And the trend now is higher in these rates. So that's an indication that that the lows are in.
Oh, okay. So if that was the case, like you just said, if there's a couple of more days, the rally continues and breaks some support, I think that you mentioned earlier in your show, then it would be a reasonably good time to buy some copper. And
I think it'd be. Yeah, I think if you see the dollar index below 76, if you see, I'd say on the Dow Jones, right now we're 11,500. I think if we close above, like here's 11,700. There's a very, very strong probability that we've seen the lows of this correction, and we're headed higher, back up to the highs for the Dow and metals and everything else.
Okay, so not only for copper, but in the China market also.
Yeah, I think we pretty much the global markets are all acting in tandem. They're moving in the same direction right now, and so I think that is going to happen. Eventually, we're going to break that pattern, but I don't think we've broken it yet. And I also think that once the markets get to the highs, if the Dow gets to new highs, it's probably not going to keep on going. It's probably going to sell off again. There is a lot of resistance in the Dow up around 12,500 through 12,800. So I'm not looking for an explosive move in the Dow where we just blow through those highs and make new highs above 14,000. I think that we're still it's going to be difficult for the markets to move considerably higher, but we can have a rally from here. And again, I'd much rather play it with foreign stocks, with commodities, with foreign currencies than with U.S. stocks. But anyway, hey, thank you for the call. We've got a great guest coming up. We're going to discuss a return to the gold standard when we come back. So stick around. You're listening to the Peter Schiff Show here on SchiffRadio.com.
The Peter Schiff Show. We now return to the Peter Schiff Show. Call in now, 855-4-SCHIFF. That's 855-472-4433. The Peter Schiff Show.
And this is Peter Schiff here at SchiffRadio.com. Joining me now is Louis Lehrman. Louis was a member of the U.S. Gold Commission back in 1981 with Congressman Ron Paul, and he actually co-authored the book, The Case for Gold, back in 1982 with Ron Paul. I think he also was working with other economists, including Murray Rothbard. He has a newer book out now. In fact, his paperback version, I don't know, I guess there was a hard copy, but the paperback just came out a couple of weeks ago, The True Gold Standard, a monetary reform plan without official reserve currencies. There's always a lot of criticism, I think wrongly so, of the gold standard based on the fact that, hey, it's too impractical. Well, Louis Lehrman has an answer to that practical question, and he's actually put it in the form of a book. Louis, welcome to the show.
Good to be with you, Peter.
All right, well, let me first ask you, so what is your plan, if you can surmise it briefly? How do we go from a fiat system to a real system based on gold?
Well, if I may, Peter, that's exactly the reason. That question is, in fact, reprinted almost word for word in the book. It's the reason I wrote the book. Speaking with several senators and congressmen a year ago, they were willing to say, a stable dollar based on gold, that is to say, defining the dollar as a certain weight unit of gold, had worked during the first 100 years of the American Republic, and on the whole, the price level had been stable and the dollar stable. But since there are 150 paper currencies in the world today, none of them anchored to gold, and this has been going on now for 40 years, there's simply no way to get from here to there. So you'll see the subtitle on my book is How We Get From Here to There. And, of course, step one is that we need a Congress, and we now have a House of Representatives. We may very well have a Senate and a new president in 2012. Step one is for Congress to exercise its constitutional power to coin money and regulate the value thereof. Congress must define the dollar as a certain weight unit of gold.
Right. I mean, that's part of what the Constitution requires. Right now, the dollar the Congress has not set the value of the dollar. It's set in the marketplace every day. You don't know what it's going to be worth. But, intuitively, it would seem to me that going from a fiat standard to a gold standard should be easier than going from a gold standard to a fiat standard. After all, how do you get people to accept a dollar backed by nothing when they're used to a dollar backed by something? If we could pull that off, it seems to me that we can pull off improving by going from a dollar backed by nothing to a dollar backed by something.
Well, it would also seem to me, Peter, easier to go from a manipulated paper credit currency, not only subject to the vicissitudes of the market, but also the manipulation of the mandarins at the Federal Reserve Board. It's a lot easier to go to a dollar backed by gold, a dollar defined in law as a weight unit of gold, as the Constitution suggests, than it is to suffer the inflations and deflations, panics, booms, and busts that are engineered by the Federal Reserve System with a paper dollar that costs zero to produce and is gradually heading towards zero valuation.
Yeah, it's always ironic, too, that one of the reasons that people oppose the gold standard is because they say, well, then how is the government going to stimulate the economy when there's a recession? How are they going to print money if they're handcuffed by gold? And my answer, of course, is, well, precisely. We don't want them doing that. That's why the recessions are so bad, because the government tries to put out the fire with gasoline.
Well, I think also we've learned, Peter, that when the Federal Reserve Board creates new money in order to finance the Treasury, that we get inflation. We may not get it immediately, but we get inflation, and sometimes we get a terrible inflation. And on the back of inflation, as a result of the credit boom, we then get a terrible deflation, such as 2008 and 2009.
Yeah, and sometimes the inflation is harder to spot because the inflation is preventing prices from falling that should be falling, that the market needs to fall, and so inflation prevents that from happening. That's still inflation, even if it doesn't mean that prices are rising. It simply means they're not falling, which was what the market should have done. But, I always get the question when you're talking about, okay, let's get the government to redefine the dollar in terms of a specific weight of gold. Obviously, we can't go back to the 42. That's the official value now from when Nixon went off the gold standard. What price? How do you decide what that value is going to be? I mean, is it 5,000 an ounce, 6,000, 10? I mean, what is the rate?
Well, there is a specific methodology which I have spelled out in detail in my book. I think it's between pages 55 and 86. And it's something which I worked on for a long time with the great monetary economist of France, Professor Jacques Rueff, who was a teacher of mine. And I would like to recommend, for those who have a chance, it's a short book, to read my book, The True Gold Standard, and to judge it on the merits, and of course to send me their own criticisms and recommendations. But in a word, there are two criteria by which we determine what the weight unit of gold must be for the dollar. First, in the market, once the announcement is made that the dollar will be defined as a certain weight of gold, all participants in the market will begin to organize their affairs by managing their cash balances, their equities, their bonds, or their savings accounts in such a way to anticipate a stable dollar again. Instead of figuring out how to protect themselves from the ravages of inflation and deflation, they will be anticipating a stable dollar. That will produce a gold price in the market which reflects the buying and selling based upon the hundreds of millions, perhaps a billion people who are interested in what the value of the dollar is. The second issue is after this market period, whereby we allow the market to respond to the initiative of the United States to unilaterally restore the gold standard, then we arrive at the date whereby Congress must legislate. And, of course, when Congress legislates, there are hearings, and the hearings are generally from so-called experts. At that particular point, it is a very easy analysis. It's an econometric analysis whereby you do a bottoms-up analysis of the cost of production, the average cost of production of gold in all the mines that are still producing at that time new output of gold. And then you then you analyze what the average of the marginal costs of gold production in all the mines, weighted for their output. The price must then be proportional to the average and the marginal cost of production because, as with all goods, especially with the monetary standard, you want to provide for a permanent production of the monetary standard on a very steady basis. The production of gold grows at about 1.5% per year over the long run and has done so since the onset of the Industrial Revolution. So what you want is production circumstances in the gold mining industry which allow for a steady, gradual production of this very scarce monetary standard. That price today, for example, the average cost of production today are approximately all in, including exploration as well as new mine development, about $1,000 to $1,100 an ounce. If you look at the average of the marginal cost, it's much closer to $1,500 an ounce. For example, in South Africa, even a little bit higher. So if you were thinking about the equilibrium price today, you would probably be thinking of something somewhere between $2,000 and $3,000 an ounce. And I say that only because you've asked a concrete question and you like to get a specific answer. But there should be no presumption of what the convertibility price for gold will be 1 year, 2 years, 3 years, 4 years from now.
Well, I understand that, but you're saying that if we were to try to go on a gold standard today, given the amount of currency currently in circulation, given all of the U.S. government liabilities currently outstanding, that a ratio of somewhere between $2,000 to $3,000 an ounce, the U.S. government would be able to settle all those obligations in gold?
The U.S. would never have to settle. That's the whole point of the gold standard. When the price is set with as I said, you used the phrase now. As I said, it would take a period in the market after the announcement for the market itself to adjust. This might be a year or two.
But when you're talking about going back to a gold standard, are you talking about a gold standard where if they pick, let's say they pick $2,500 an ounce, where I can go to the U.S. Treasury with my $2,500 Federal Reserve notes, and they're going to give me 1 ounce of gold? Are you talking about convertibility or just saying that the dollar is worth a certain amount?
All banks and the central bank, as well as the Treasury, would be required to maintain monetary convertibility. If you just
right, well, that would mean then if our creditors sensed that we didn't have enough gold, then the Treasury would in fact have to redeem its debts in gold at that ratio. That's so if you're going to go on a gold standard, the world has to believe that America has enough gold in order to make good its obligations. Otherwise, they're going to demand the gold. And then it's going to force a devaluation if we don't have it.
Your question, or would you prefer to answer your own?
No, I want you to answer it. I just want you to understand my question. Go ahead.
Okay. It is a mistake, as I tried to say, to try to say right now what the convertibility price of gold should be. Because after the announcement effect, you want the market to adjust to the fact that the United States is going to establish unilateral convertibility on a date certain, which will be a future date certain. And during that market period, you have to allow the market to adjust to that wholly new consideration of a dollar as good as gold, a stable dollar once again. Then at the time where the date certain has to be set, of course, by Congress, because Congress is the one authorized by the Constitution to coin money and regulate the value thereof, at that particular time, Congress also then goes through a process called hearings before legislation, whereby they examine all the different methodologies whereby one arrives at a convertibility price, which, as you are suggesting, has to be sustained over the long run. Now, that price could easily be $4,000. It could be $5,000. That's why I say there should be no presumption today on what that convertibility price would be, and there is simply no way to inaugurate convertibility overnight.
Right. So, in other words, what you're saying is after the government announces its intention, the market will then figure out the right price. It will reset, and then the government will take its cues from the market to try to determine what would be the appropriate sustainable level from which the dollar could officially be pegged.
That is correct, and that's why I think it is a mistake for experts of all sorts, and particularly someone who is as well known and as expert as you are, to try to guess what the convertibility price is now, because we have a whole set of economic, political, and monetary considerations that are going to take place in the next year.
Well, we will continue to discuss those considerations when we come back. This is Peter Schiff here at SchiffRadio.com, so stick around.
To consider the alternative.
The Peter Schiff Show.
And the summer fades to fall.
Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back. This is Peter Schiff on the Peter Schiff Show, speaking with author Louis Lehrman. His latest paperback, The True Gold Standard, a monetary reform plan without official reserve currencies. And so, Louis, if we actually, do go back on a gold standard, wouldn't that mean that once we adopted it, it would pretty much bring an end to future deficit spending? And wouldn't it force the Congress to make serious reforms, meaning cuts in entitlements, because it would simply be impossible to honor these commitments with a gold-backed currency?
Well, precisely, Peter. In the last 30 years, we've had 10 balanced budget statutes which have been passed through Congress, the most famous one being Graham-Latta. These are all very well-intentioned congressmen and senators who believed that they could, in fact, bring about a balanced budget. All of them have failed. Why? Because the Federal Reserve System finances the budget deficit of the United States. Foreign central banks finance the budget deficit of the United States. Our balance of payments deficits are paid for in dollars which we print up ourselves in order to settle our debts abroad. And these dollars, which are held abroad and by the Federal Reserve System, are invested in U.S. Treasuries. If you have an unlimited credit card, which is what the Treasury has, I might add the Congress, when they're doing their appropriations, what person who is never going to have to settle his credit card is ever going to settle his credit card? What the gold standard does, it puts the control of the money supply back into the hands of the people, so that if the Federal Reserve is creating more money than people want to hold, and they're able to turn it in for a specified weight unit of gold, then by law, because of the statute passed by Congress establishing a gold dollar, by law, the Federal Reserve System then has to reduce the quantity of money in circulation or the quantity of credit, thereby stabilizing the gold parity. So you're dead right. One of the keys to ending the budget deficit and the balance of payments deficits, which have been perennial, is, in fact, to reestablish the gold standard. And I prefer to say, instead of going back to the gold standard, what we really are doing is we're going forward to a gold standard in order to renew our country.
Of course, when the Founding Fathers put us on a gold standard, that represents a step forwards in their opinion because they saw how paper currencies had failed. We didn't invent fiat money. It was around a long time ago, and it didn't work way back then, and it doesn't work now. But that, I think, is the real reason behind the opposition to a return to the gold standard. It's not about the fact that it's impractical. The problem is if we go back to a gold standard, we impose discipline on Washington, and they don't want that discipline.
And that's why I think we have to be very enthusiastic about the Tea Party, which was born of injustice, the injustice caused to the middle class, whereby the Federal Reserve bailed out with the Treasury to the tune of 3, 4, 5 trillions of dollars. Foreign banks, domestic banks, the whole cartelized banking system, not to mention corporations like GE, while millions of middle-income Americans went to the wall in bankruptcy without sufficient help in order to sustain them. So we have a political movement now, which I'm not saying is necessarily a gold standard movement, but there are millions of Americans who are now realizing the injustice of the paper money system, whereby the Federal Reserve is able to manipulate the quantity of credit and the quantity of money in circulation according to the determinations of the faculty lounge, which is to say the mandarins of the Board of Governors.
Yes, and even if you look, at the Republican debates they had last night, they were near unanimous in their criticism of Ben Bernanke. And so at least the politicians are starting to criticize bankers for being too loose, for creating too much money. Normally, when politicians are beating up on bankers, it's because they're too tight. But here we're actually seeing them beating up on him for being too loose. And even if you look at this Occupy Wall Street movement, they're protesting capitalism, but if you look at their protests, they're protesting the bank bailouts. They're protesting corporate bailouts. They think that's capitalism. They're wrong. That's the opposite of capitalism.
Peter, if you would permit me, I want to come back to this issue of how we get from here to there because, the Yale faculty, the Harvard faculty, all of the academic elites, of course, make the case that there's no way to get from here to there. And in my book, I lay out the step-by-step how we get to the gold standard. I think it's very important for a prestigious commentator like yourself to make the case step by step on how we get from here to there. And you made the crucial point that once the announcement is made that the dollar is going to be made as good as gold, that the public announcement that the dollar will be established as a defined weight of gold, just as the Constitution requires, then you have the market taking over, as you suggested. And over an adjustment period, the gold price will come out approximately where it should come out. However, we have to take into consideration, as we do in the production economics of all goods and services, we have to consider the cost of production. And that is a final consideration which would go into the hearings of the legislation. What price not only provides for the equilibrium price, but what price also provides for the production of the monetary standard on a stable basis. Now, if that is done wisely, and I think it can be done well because it's a very simple operation, what you then have, to answer your question about, well, can people turn in their money for gold, all of the liabilities of the banking system, what happens if you got the price right, people want to hold paper.
Yeah, exactly. It's only when the price is wrong, and if people don't trust it, that you actually have to do it. But anyway, hey, we're running out of time. I wish we had more time. It's a very interesting discussion. It's one that needs to be had on more shows, not just my radio show, but on more shows and in more mainstream media. But anyway, everybody else, don't go away. We've got another full hour coming up here on the Peter Schiff Show on SchiffRadio.com.
The Peter Schiff Show.
Comes the only
Make no friends in the pits and you take no prisoners. 1 minute you're up $500,000 in soybeans and the next, boom, your kids don't go to college and they've repossessed your Bentley. Are you with me?
The revolution starts now.
we have to pass the bill so that you can find out what is in it.
Turn those machines back on!
You are about to enter the Peter Schiff Show.
Show me the money!
If we lose freedom here, there's no place to escape to. This is the last stand on earth.
The Peter Schiff Show is on. Call in now. 855-4-SCHIFF. That's 855-472-4433.
I don't know when they decided that they wanted to make a virtue out of selfishness.
Your money, your stories, your freedom. The Peter Schiff Show.
This is Peter Schiff here at SchiffRadio.com. Hour 2 of the Peter Schiff Show is underway now, and the markets continue to be trading in the green, the dollar in the red. In fact, the dollar index is now sunken below a 77, trading with a 76 handle. Some of the currencies like the Australian dollar and the New Zealand dollar up almost 2% on the day. You know, these are big moves that we have in the Forex market now when currencies can gain or lose 2% of value in a single day. These are big moves, and they kind of happen with great frequency nowadays. The euro, not quite as volatile, but still is up close to 1%. We're now trading about 137.5, which is the highest the euro has traded in several weeks, and we have some key resistance, I think, coming up around the 138.5. If we can get above that and then get above 140, look out. It could be a big shot as a lot of people rush to cover their short euro positions. Anyway, I want to go back a little bit to the debates from last night. Probably, I think, one of the best lines that we had actually came from Newt Gingrich. Maybe even stealing a little bit of Ron Paul's thunder, because I'm sure when Newt was making this speech or giving this answer, I'm sure Ron Paul was applauding him, if not publicly, at least silently. But he had made some good points, so I want to give him credit for making it. And let's play a little bit of what Newt had to say. Play cut number 4.
The first person to fire is Bernanke, who is a disaster as chairman of the Federal Reserve. The second person to fire is Geithner. The fact is, in both the Bush and the Obama administrations, the fix has been in. And I think it's perfectly reasonable for people to be angry, but let's be clear who put the fix in. The fix was put in by the federal government. And if you want to put people in jail, I want to second what Michelle said. You ought to start with Barney Frank and Chris Dodd, and let's look at the politicians who created the environment, the politicians who profited from the environment, and the politicians who put this country in trouble.
Amen to that. And notice how he is putting both the Bush administration on the hook as well, not just the Obama administration. And listen to the Charlie Rose follow-up and the Gingrich answer, cut number 5.
Clearly not saying they should go to jail.
Well, in Chris Dodd's case, go back and look at the countryside deals. So, in Barney Frank's case, go back and look at the lobbyists he was close to at Freddie Mac. All I'm saying is, so if you were everybody in the media who wants to go after the business community ought to start by going after the politicians who have been at the heart of the sickness which is weakening this country, and ought to start with Bernanke, who has still not been exposed for the hundreds of billions of dollars.
Absolutely. You know, that's good stuff, and obviously Ron Paul is having an influence on some of these other candidates who are starting to appreciate the problems that Washington, the politicians and the bankers have created, and that the public's reaction, the public's anger is misdirected when it is directed at private enterprise, whether it's the banks or corporations. They are not the driving force here. It is the politicians, the bureaucrats, and the bankers that are creating the conditions that have led to the problems that everybody is protesting. And it's nice to hear Speaker Gingrich pointing that out. You know, Ron Paul, too, needs to point it out more often. Point out who are the villains here, who is culpable, and what are the real solutions in order to get this economy back on track. I mean, that's one of the things about Herman Cain, is he at least comes out with a solution that people can understand. You know, it's a lot of the other candidates are trying to poke fun of the 999 plan. I think that's a mistake, because the 999 plan is preferable to what we got now. Is it ideal? No, it's not ideal, but it's a lot better than the system we got today. So it doesn't make sense to attack that if you're then going to defend the status quo. You know, I'd much rather have a 9% flat rate income tax that I think exempts capital gains and I think corporate dividends than the progressive monstrosity we have now with all the loopholes. And, yes, we have to make up the revenue somehow, so making it up with a national sales tax is a lot less intrusive of constitutional rights. A lot, you don't have all the compliance costs. And as Kane pointed out, some of that tax is going to be paid by tourists who happen to be coming to America shopping, and you're going to pick up a lot of the underground economy. It is a much fairer, better way for the government to raise revenue. Now, one of the points, I think Michelle Bachmann pointed this out, is that, well, what if we end up with the income tax and a national sales tax? What if we resurrect the old income tax? And, of course, what we want to do is we want to make sure that we destroy the old tax code so it can never come back. So that has to be crucial, that if we adopt this plan, and I think Kane is in support of that, we have to do it in such a way that the old tax code can never be resurrected, that it has to be some kind of bar against ever going back to something like that, so that we can have that framework and not simply open up the door to just even higher levels of taxation at some point in the future. But, of course, the ideal income tax rate would be 0. And, I don't know, maybe a 9% rate could be a stepping stone in that direction to the ultimate abolishment of the income tax, which I wish Ron Paul would kind of make more of a theme of his campaign, too, to get rid of the IRS. I know he believes in that. I know he'd like to get rid of the IRS. He never seems to talk about it much in these debates, and I think for that case, he ends up leaving the stage open to Herman Cain, who's the only one that's really talking about getting rid of the IRS. And I think that resonates with a lot of people because there is not a lot of love for the IRS, I'm sure, particularly within the Republican Party. But anyway, let me go back to the phones. On hold is Tom calling from Grand Rapids, Michigan. Tom, welcome to the show.
Thanks for having me, Peter.
Hey, how are you?
Good. I had 2 questions for you. First one was the gentleman before your guest, Louis Lerman. He said you asked him a direct question about what would be the price of gold if it went back to a gold standard today. Can't we just count the base money, the M3 money supply, the M2 money supply, and combine all those things and get a price? Because there's a gentleman on the internet, not like a guy just hiding out in his mom's basement, but a real expert. I'm not going to mention names because your producer told me not to say anything, but that we could get come to a number, and this gentleman was talking about $20,000 gold. What's your feelings on that?
Yeah, I mean, I don't know. I mean, I always thought that the number would be somewhat north of 5,000. I mean, whether it's as low as 2,500 or 3,000, which suggested might be the case. But again, his response was, we don't know. Let's let the market try to figure it out, which, on the surface might make sense. If, the government announces that we are going to go back on the gold standard, the market is going to try to find a price that would make that possible, because people are going to react to that in the gold market. And, obviously I think that would increase demand dramatically for gold, because it would be the process of remonetizing gold. And so if we're going to remonetize it, it's going to have that monetary premium. Right now, gold doesn't have that premium because gold is not being used as money in a widespread way. I mean, people are using it as a store of value on a small scale, but not on the scale that it would be if the U.S. dollar were to, be backed by gold once again. In fact, if we went back on a gold standard, the whole world would be on a gold standard as long as the dollar is the reserve currency. If we back by gold, then everybody is backed by gold. And so, the price is obviously going to be higher. The question is how much higher, I don't know. But what I do know is I want to own my gold before that announcement rather than after. Anyway, thanks for the call. We will be back with more of the Peter Schiff Show. So stick around. This is Peter Schiff on SchiffRadio.com.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
And this is Peter Schiff here at schiffradio.com, broadcasting from Toronto, Canada. Remember, again, if you're here in Canada, don't forget to listen to me at 4 o'clock Eastern Time on BNN. In the meantime, I am taking your calls. There is an open board if anybody wants to call in. 855-4SCHIFF, 855-4SCHIFF is the number to call. Meantime, I wanted to focus some more attention again on President Obama. He was making a speech the other day, and again, he is trying to claim that American entrepreneurs owe their success to the government. That, again, without the government schools or government involvement, that somehow none of these entrepreneurs would have been able to succeed, that they owe their success to government. And therefore, we need bigger government, more government to ensure the continued success of American entrepreneurs. And, of course, all of this is complete nonsense. In fact, the reason that America had invented so many things that weren't invented in other parts of the world was precisely because we had a lot less government. Businesses succeed despite government, not because of government. And the key to business success is to limit government involvement. Now, yes, do people go to government schools? Of course they do. But that assumes that if the government didn't have schools, that there would be no private sector schools. If the government wasn't taking resources away from the private sector to provide public education, we would still have education. It would just be provided privately, and I think it would be much more effective and much less expensive. So in other words, we would have better educated people if the private sector was doing it, and so instead the government does it. So maybe Steve Jobs went to a public school, but if there was no public education, that doesn't mean Steve Jobs would have remained, illiterate. He might have been at a private school and may have been even smarter. Who knows? Maybe we'd have even better Steve Jobs products if we didn't have public schools. And, of course, if the president wants to make Steve Jobs an example, which he did in his most recent speech, and I'll play a bit from it, he has to remember that Steve Jobs dropped out of college after just one semester. Had he stayed on college and used government loans to finance his expensive education, he probably never would have started Apple Computer, and none of these products ever would have developed if he was, stuck in that government system. It was because he dropped out of school that he was able to succeed. But again, the president is putting the cart before the horse when they say that it is because of government that entrepreneurs succeed. It's because entrepreneurs succeed that we have government, because after all, they're the ones that create the jobs, that pay the taxes that Obama is spending. And the solution is not to tax these individuals more, but to try to tax all individuals less, particularly those that are creating the jobs and the products that we all rely on. But anyway, let me play a little bit of President Obama here. This is cut number 8.
But, none of us make it on our own. Somebody, an outstanding entrepreneur like a Steve Jobs, somewhere along the line he had a teacher who helped inspire him. All those great internet businesses wouldn't have succeeded unless somebody had invested in the government research that helped to create the internet. We don't succeed on our own. We succeed because this country has, in previous generations, made investments that allow all of us to succeed.
It sounds like he might have been speaking in front of an audience of teachers. I know he was at a fundraiser. Maybe it's a teachers union there. I doubt there were that many teachers that were that inspirational along the way. But again, as I said, there would be teachers without government schools. They would be private teachers paid with private money, not through government. And of course, the quality would be better. The cost would be lower. So all this would happen. But of course, what is enabling the government to generate the revenues necessary to get involved is because of all the people like Steve Jobs that are creating companies that create revenue, that create jobs and taxable incomes from which the government is able to derive its revenue. It is not the other way around. Anyway, I'm going to play a little bit more of the president here, cut number 9.
So this is the land of opportunity, but we have to remember those of us who have done well. We should all pay our fair share in taxes to contribute to the nation that makes our success possible. That's not class warfare. That's not an attack on anybody. That's just common sense. That's just fairness.
Yeah, but the whole underlying assumption here is that as of this moment, these wealthy people who are producing all the jobs and creating all the wealth are not paying their fair share. Well, how can you say that the wealthy are not paying their fair share when, based on the current tax code, they are paying 35% of their income in federal income taxes and another 3% of their entire income in Medicare taxes? So in total, the federal government is taking 38% of the total income of wealthy Americans. That is a much bigger percentage than it takes from people who earn $20,000 a year, $40,000 a year, $50,000 a year, $100,000 a year. So aren't they already paying their fair share? In fact, aren't they already paying more than their fair share? In fact, they're paying much more than their fair share when you take the total tax. I mentioned this before, but if somebody is earning $10 million in taxable income, they're paying $3.8 million right now to the federal government in income and Medicare taxes. $3.8 million. Somebody who is earning $100,000 a year is only paying around $20,000 or so in total tax. If someone is paying $3.8 million, aren't they paying more than their fair share if someone else is only paying $20,000 or someone else? There are plenty of people that aren't paying anything in those taxes, yet they still live in America. They still enjoy the same rights and the same freedoms as the guys that are paying millions and millions of dollars. The fact of the matter is the millionaires are paying more than their fair share right now, and President Obama has to know it. And instead of pretending that they're getting away with murder here, that they're skating and everybody else is carrying the burden because the rich are not doing their fair share, is wrong, and the president knows it, and he ought to be thanking the wealthy for paying more than their fair share right now, and more than just paying the taxes. What's more important is the businesses that they create and they run, the products that they produce, the services they provide, and the employment opportunities that they create. Anyway, let me go back to the phones. I got a call from Japan. Is it Mick on the line?
Hello? Yeah, it's Mick. How are you, Peter?
I am well. You sound like you're an Aussie living in Japan, I guess.
Yes, yeah, indeed. Just on the point of taxation, I really can't understand. I was talking to a gentleman the other day who honestly believed that the tax rate might answer your question regarding what is a fair amount to pay. Honestly believes, he works in a factory, but honestly believes the rate should be 70%. That's 70.
Well, how can anybody believe that? How can anybody believe that the government has the right to 70% of what somebody produces?
Well, I can't understand how. Common sense. Obama said in that clip you put, common sense. Common sense means if my boss was going to pay 70%, I'd be out of a job because he wouldn't be running the business. He'd be on holiday somewhere.
Yeah. Anyway, we will. If you want to hang on, we'll continue this discussion. We got a break coming up, but I'd like to talk a little bit longer about this topic. So stick around. We'll be back here at the Peter Schiff Show at SchiffRadio.com.
The Peter Schiff Show. To President Obama, Secretary Geithner, Madam Pelosi, and all of the socialist econ professors across America. We're sorry. Peter Schiff is back on the air.
This is Peter Schiff here at SchiffRadio.com. We are now at the final segment of the day, and I will go back. We left Mick on hold from Japan. Mick, welcome back.
Yeah, good to be back.
Yeah, I actually spent a long time in-depthly discussing your points. Unfortunately, you weren't able to hear any of it. I did kind of give a Cliff Note version briefly of some of the things that I talked about during that 10 or 15-minute time span, but I maybe you heard a little bit of it. I don't know if you had anything to add.
Yeah, basically, I just can't understand where everybody doesn't seem to understand the meaning of the word incentive, because there's just no incentive to actually go out and work, or even incentive to pay your taxes, in the sense that if taxes were lower, you'd be actually more incentivized to go and pay them. You've got, when you have a special or sale down the supermarket, it's the prices are low. Everybody runs to the shop. There's the incentive to buy it. The incentive here in Japan, companies are leaving to go to Singapore or Hong Kong because it's cheaper to do business. They're trying to raise tax incomes from business here in Japan, but businesses are leaving because it's too expensive to do business. I mean, they're trying to raise more money, but they're forcing people to leave. I can't understand where the politicians or even the people on the street who are complaining can't wrap their heads around the fact that you need incentive for people to pay money. I mean, you pay for cheap stuff because they're incentive to do it, but they want the tax money.
And that's what happens. And when the government wants to get bigger and bigger, and it wants to drain the wealth from the private sector to fund these programs, it destroys, the goose that lays the golden eggs. So, yes, I mean, you do take away the incentives to work with the high taxes, but also, more importantly, you take away the capital that's necessary to grow an economy. I mean, everybody keeps saying that we need the rich to pay more in taxes so it can help the economy. That doesn't help the economy. What helps the economy is when the rich don't have to pay taxes, because then they can invest their money. I would agree if you're talking about a philandering playboy, somebody who has inherited a bunch of money and is simply spending it all. Yes, I guess if they paid higher taxes, it might help the economy. But if you're talking about somebody who isn't spending their money, somebody whose wealth is the source of investment capital, then diminishing that money by sending it to Washington is going to diminish investment. It's going to diminish economic growth. I mean, if you actually believe that the government is going to grow the economy more effectively than private sector, if people believe that sending money to Washington is better than leaving it in the hands of the entrepreneurs, then you're a socialist. You don't even believe in the free enterprise system. You might as well advocate a communist revolution. If that's what you believe, if you think, hey, if we just force business owners to send more of their money to Washington, that's going to create jobs and grow the economy, then that's what you believe.
Yeah, I just think someone needs to really, educate the market, or get across them the word incentive, from the bottom upwards, because without incentive, even for people to go to work, they're incentivized by to earn more money. Where do you think the money comes from? It's not just they work 9 to 5, and at the end of the week they get a paycheck.
And then of course a lot of wealthier people too. People wonder, why is this guy working? Why doesn't he just golf? Why doesn't he just go fishing? As you raise the taxes higher and higher, leisure becomes more and more of an attractive option, and more businessmen will say, I'd rather spend more time with my family. I'd rather spend, more time, just on hobbies than working for 30 cents on the dollar. So, the higher you make the tax, the more attractive you make leisure.
Well, I've got an example of that. Back in Australia, probably 25 years ago, my brother-in-law said that very, very same thing. He said, I'm not working anymore because it's too expensive to work. I'm going to enjoy the beach.
Yeah, exactly. Obviously, if the tax rate were 100%, nobody would work at all, and the government would collect zero in terms of revenue. 90%, probably same thing, right? I mean, how you're not going to work for 10 cents on the dollar. You'd rather, so as and as you go down and down, at some point, you'll still do some work, but you will do less work because you have less to show for it. More of the fruits of your labor go to government, but if you decide not to work, 100% of the leisure is enjoyed by you. The government doesn't tax that. So if you just decide to lie on the beach all day, you get 100% of the enjoyment. The government gets none of it. But if you decide to work, the government gets the lion's share of the fruits of your labor. But anyway, hey, thank you for the call. Sorry for the mix-up. Last caller is going to be Scott calling from Long Island. Scott, you're on.
Yeah, hi, Peter. In my opinion, FDR was the most overrated president of all time. I just wanted you to comment on that.
Well, yeah, I mean, a lot of people think Roosevelt was the greatest American president, and far from it. In fact, he was one of the worst as far as I'm concerned. He helped lay the foundation for the social welfare state that exists today. A lot of very bad things started. Roosevelt really undermined the Supreme Court, packed the Supreme Court with his cronies in order to get through an agenda that was unconstitutional. In fact, Roosevelt really single-handedly changed the nature of our country. We abandoned all of the principles upon which our country was founded under the Roosevelt administration. And, in fact, Roosevelt took the Depression that began under Hoover and extended it. And it lasted through the end of the Second World War, thanks to Roosevelt. And now a lot of bad laws are being written based on a revisionist form of history of what happened. People claim that Roosevelt got us out of the Depression when Roosevelt prevented us from getting out of the Depression. Yeah, we didn't get out of the Depression until Roosevelt was no longer president. You know, it did it. And if it wasn't for Roosevelt, the Great Depression would have ended a lot sooner. And the U.S. would be in much better shape today because we wouldn't have, hopefully, all of these agencies and departments that were created, and the foundation for the ones that came in the 1960s and 1970s, all of them have their roots in the New Deal. Scott?
As being a modern-day Roosevelt?
Who?
Obama.
Yeah, I mean, he is certainly the equivalent, and you know, he inherited a bad situation just like Roosevelt did, and he is making it worse by repeating the mistakes of his predecessors, only expanding them and making them bigger. So he, in many days, is a modern-day Roosevelt, and that is a problem. It is not a good thing. Anyway, we have run to the end of the show. I guess that's a problem, and so we have to wrap it up. Remember, tomorrow, Tom Woods is the host. Judge Napolitano is a special guest, so it should be a great show. I will be back again on Friday from Connecticut for the last episode of the week. Anyway, you've been listening to The Peter Schiff Show here on SchiffRadio.com, the gold standard in talk radio.
The Peter Schiff Show.